morning, everyone. In today's class, we will be attempting a question from the exam kit, the Abkaber Plc. Now, the company called Abkaber assembles three types of motorcycles. One is the Sunshine, the second is the Roadster, and the third one is the Fireball. We will take a quick look at the annual output of each of these products. Annual output of Fireball is just 400 units. So, the machine hours taken for Fireball is the least. And we know that under absorption costing, overheads gets divided based on machine hours. So Fireball will get a very low share. So what I mean to say is, under absorption costing, since the share of overheads of Fireball is less, the cost of Fireball will also be less, correct? Now, can you guess what will come in the second part of the question? In the question, they will say that the company is shifting from absorption costing to activity-based costing. And under activity-based costing, overheads gets divided between the products based on cost drivers. And they will create the cost drivers in such a way that Fireball gets a higher share. So under absorption costing, Fireball will have a lower share. And under ABC, the share of overheads will be high. And you will be asked to analyze the difference between the two. This is what the question is about. So with this idea in mind, let's tackle the question. So this is the question extracts. Abkaber Plc assembles three types of motorcycles, the 50cc Sunshine, the 250cc Roadster, and the 1000cc Fireball. All overhead costs were allocated using direct labor hours. Very important. This is the method in which the overheads are going to be divided under absorption costing. The company is now considering introducing ABC. The details are annual output in units of the three products have been given, the annual direct labor hours given, the selling price per unit given, and the direct material cost per unit is also given. Annual overhead costs are, so you have three types of fixed overheads. One is deliveries to retailers, 2.4 million, setup cost 6 million, and purchase order cost 3.6 million. All direct labor hour is paid at $5 per hour. The company holds no inventory. What is the total profit of the products using absorption costing? So in order to find out the total profit, we have to first divide the overheads between the three products. In which ratio? In the ratio of the direct labor hours. So we shall make a note of it. Overhead allocation, divide overheads in the ratio of direct labor hours. So here there are three classifications of overheads, but in absorption costing, we just need to take the total and divide it based on direct labor hours. So what is the total? The total is $12 million. So you will have to divide $12 million in the ratio of direct labor hours. And what is direct labor hours? The ratio is 200,000 is to 220,000 is to 80,000. So once we divide the $12 million in the ratio of the direct labor hours, our first step is done. So we shall make a table for it. So the first column is overheads. We have a total overheads, and what is the amount? The amount is 12 million. So I've just copied it here. And what is the basis of division? We have to divide it based on direct labor hours because that is specified in the question. Now we shall get to the division part. So the ratio of division is 200,000 is to 220,000 is to 80,000. So we shall make a note of the respective amounts against each of the product. So 200,000 for Sunshine and 220,000 for Roadster and 80,000 for Fireball. So what is the total hours? It is 200,000 plus 220,000 plus 80,000, giving a total of 500,000 direct labor hours. So in order to divide the $12 million, that is the total overheads, in this ratio, what is the first step that we have to do? We have to divide the total overheads, that's $12 million, by 500,000 direct labor hours. What do we get when we divide it? We get the overhead absorption rate per direct labor hour because we are dividing the total overheads by the total direct labor hours. So what is the answer? It is $24 per direct labor hour. So for each hour that the direct labor is working, we incur an overhead of $24. Now we will go to the allocation part. For each direct labor hour, the overheads is $24. So Sunshine, which takes 200,000 direct labor hour, what is the overhead share? It is 24 into 200,000. Now coming to Roadster. For one direct labor hour, 24. Roadster takes 220,000 direct labor hours. So it is 24 into 220,000. And for Fireball, it is 24 multiplied by 80,000 direct labor hours. So we calculate the amount. So total overheads allocated to each product is 4.8 million for Sunshine. That is by solving 24 into 200,000. 5.28 million for Roadster. That is 24 into 220,000. And 1.92 million for Fireball. That is 24 into 80,000. So now we have allocated the total overheads among these products in this ratio. That is 200,000 is to 220,000 is to 80,000. Now you might wonder, why can't I simplify this ratio? Yes, you can definitely simplify. You will get the very same answer. But the problem is, if you simplify, you will not be able to arrive at this figure. That is overhead absorption rate per direct labor hour. This is a step which carries mark. That is why I am not simplifying. Else you could simplify it and you will directly come to this step. So now we have arrived at the total overheads. Please check whether the total of all these three amounts to $12 million. And what is it that you have to do next? You have to find out the overhead cost per unit. How do you find out the overhead cost per unit? By dividing by the number of units. So let's check in the question the number of units of each product. Number of units of each product from the question, it is 2,000 units for Sunshine, 1,600 for the Roadster, and 400 for the Fireball. So let's make a note of it in the answer. So number of units, it's 2,000, 1,600, and 400. And what is the overhead cost per unit? It is the total overheads divided by number of units. So for Sunshine, it is 4.8 million divided by 2,000 units, giving an amount of $2,400 per unit. And for Roadster, it is 5.28 million divided by 1,600 units, giving an amount of 3,300. And for Fireball, it is 1.92 million divided by 400 units, giving an amount of $4,800 per unit. So we have arrived at the overhead cost per unit. Now, in order to arrive at the total cost, what are the two things that we have to add? We have to add the direct material cost and the direct labor cost. So let's advance to the next step. Now I have just copied the overhead cost per unit that we just found out. Now let me just copy the question extracts too. So the two things that we have to add to the overhead cost per unit to arrive at the total cost is the direct material cost and the direct labor cost. The direct material cost is directly given in the question. So we will just copy the direct material cost per unit from the question. Okay, so that's done. Now coming to the direct labor cost. Direct labor cost, they have given the direct labor hours. They've also given the rate per hour. So when you multiply, you will get the total direct labor cost. Working note 1, direct labor cost per unit. For Sunshine, the total direct labor cost comes to 200,000 is the direct labor hours. And what is the rate per hour? It is $5 per hour. So 200,000 multiplied by $5 per hour, you get the total direct labor cost in dollar. But we don't want the total direct labor cost. We want the direct labor cost per unit. So we have to divide it by the number of units of Sunshine, and that is 2,000 units. So we divide it by 2,000 units to get an amount of $500 per unit. Now coming to Roadster, direct labor hours is 220,000 multiplied by $5 per hour to get the total direct labor cost, and you divide it by 1,600 units to get the direct labor cost per unit at 687.5 per unit. Now coming to Fireball, the direct labor hours is 80,000 hours, and you have to multiply it with $5 per hour to arrive at the direct labor cost in total, and you divide it by the number of units, that is 400 units, to arrive at the direct labor cost per unit, that is $1,000. Now we copy these answers into the direct labor cost per unit. Okay, so that's done. Now, in order to arrive at the total cost, all that we have to do is add the three. So for Sunshine, the total cost amounts to 3,300, and for Roadster, add these three to get the total cost at $4,587.5. And for Fireball, we add these three to arrive at the total cost at $6,700. So we've got the total cost per unit under absorption costing. What they had asked was to arrive at the total profit. And what is profit? Profit is selling price minus total cost. So in order to arrive at the profit, I have just copied the cost per unit that we just found out. Now let me just copy the question extracts too. Okay, so the selling price, yes, it is here. The selling price of all the three products. So we shall fill that in our answer sheet. So selling price is 4,000, 6,000, and 8,000 for all the three products. So what is the profit? Profit is selling price minus total cost. $700 for Sunshine, $1,412.5 for Roadster, and $1,300 for Fireball. And in order to get the total profit, we have to just multiply it with the number of units. So number of units is given here. So we will just copy the number of units from the question. And so the total profit for Sunshine, it is 700 into 2,000 units. That is 1.4 million. And for Roadster, it's 1,412.5 multiplied by 1,600 units. It is $2.26 million. And for Fireball, it is $1,300 multiplied by 400 units, giving an amount of $520,000. So what is the total profit? Adding the three figures, we get a total profit of $4.18 million. With this, we are done with the absorption costing. Now moving on to the ABC method. So we all know that under ABC, overheads gets divided between the products based on cost drivers. So let's take a look at the cost drivers that have been given in the question. So this is the annual overhead cost, and there are three cost pools. One is delivery cost to the retailers, the second one is the setup cost, and the third one is the purchase ordering cost. And they have given the cost drivers. So for delivery cost to retailers, it is the number of deliveries, and it is given here with respect to the three products. Now going to the second cost pool, that is a setup cost. What is a cost driver? The number of times the assembly line process is reset for producing a different motorcycle. That is nothing but the number of setups. And the number of setups with respect to each product is given here. And regarding the third cost pool, that is a purchase ordering cost, the cost driver is a number of purchase orders, which is given here. So we've got all the details in the question. Now, all that we have to do for calculating the total profit under ABC is to split the overhead cost according to the cost driver ratio. So let's get started. So I have copied the relevant question extracts. We have the three cost pools here, and we have the respective cost drivers here. So we will start off with the answer by drawing a table by copying all the cost pools and the cost pool amount. So here it is. This is nothing but the cost pools copied from the question. Now, what are the respective cost drivers? For the delivery cost to retailers, the cost driver is the number of deliveries. And for the setup cost, it is the number of setups. And for the purchase order cost, it is the number of purchase orders. Now we will record the cost driver amount also in the table, because 2.4 million, that's the delivery cost, has to be divided in which ratio? In the ratio of the number of deliveries of each product. That is 100 is to 80 is to 70. So we should record that. So I am going to copy the first cost driver into the respective products. So it is 100 for Sunshine, 80 for Roadster, and 70 for Fireball, giving a total of 250. That is 100 plus 80 plus 70. Now coming to the second cost driver, the number of setups. So we shall key in that figure. So 35 for Sunshine, 40 for Roadster, and 25 for Fireball. And we total the number of setups, that is 35 plus 40 plus 25, giving a total cost driver of 100 setups. Now coming to the third cost driver, that is a number of purchase orders. It is 400 for Sunshine, 300 for Roadster, and 100 for Fireball. And the total comes to 400 plus 300 plus 100, giving an amount of 800 purchase orders. So what are we trying to do? 2.4 million will be divided in the ratio of 100 is to 80 is to 70. And 6 million will be divided in the ratio of 35 is to 40 is to 25. And 3.6 million will be divided in the ratio of 400 is to 300 is to 100. So the first step is to find out the overhead absorption rate. So that's the last column. So how do you calculate the OAR? OAR is nothing but the overhead amount divided by the cost driver amount. So we will take the cost pool one by one. So regarding the first cost pool, that is the delivery cost to retailers, it is 2.4 million divided by 250, which gives an amount of $9,600 per delivery. Now for the second cost pool, that is a setup cost, the overhead absorption rate is 6 million divided by 100 setups, which gives an amount of 60,000 per setup. Now coming to the third cost pool, that's the purchase ordering cost. The OAR will be 3.6 million divided by 800 purchase orders, giving an amount of 4,500 per purchase order. Now we have to allocate the overheads to the respective products. So regarding the first cost pool, that is the delivery cost retailers, for Sunshine, for one delivery, it is $9,600, and Sunshine takes 100 deliveries. So the total amount is 9,600 multiplied by 100, giving an amount of $960,000. Now coming to Roadster. For one delivery, it is 9,600, and for Roadster, we are making 80 deliveries. So the total amount is 9,600 multiplied by 80, or 768,000. Now coming to Fireball. For one delivery, again, it's 9,600. And for Fireball, we have 70 deliveries. So the total amount is 9,600 multiplied by 70, giving an amount of 672,000. Now coming to the next cost pool, that is a setup cost. For Sunshine, for one setup, it is $60,000. And for Sunshine, we are taking 35 setups. So the amount comes to 60,000 multiplied by 35, giving an amount of 2.1 million. Now coming to Roadster, for one setup, again, it's $60,000. And for Roadster, we are making 40 setups. So 60,000 multiplied by 40, it comes to 2.4 million. Now regarding Fireball, again, for one setup, it is $60,000, and Fireball takes 25 setups. So the total amount is 60,000 multiplied by 25, giving an amount of $1.5 million. Now coming to the last cost pool, that is a purchase ordering cost. For one purchase order, it is $4,500. And for Sunshine, we are having 400 purchase orders. So the purchase ordering cost relating to Sunshine is 4,500 multiplied by 400, giving an amount of 1.8 million. And regarding Roadster, for one purchase order, $4,500. And for Roadster, we are taking 300 purchase orders. So the total amount is 4,500 multiplied by 300, giving an amount of $1.35 million. Now for the last one, that is a Fireball. For one purchase order, it is $4,500, and Fireball, we have 100 purchase orders. So it is 4,500 multiplied by 100, giving an amount of $450,000. So now we have got all the overheads split between the products. Now all that we have to do is total the three for each of the products. So total overheads relating to Sunshine is the total of these three. We get an amount of $4.86 million. And for Roadster, total these three to get an amount of $4.518 million. And regarding Fireball, the total of these three amounts to $2.622 million. So we've got the total overheads. Now just divide it by the number of units. And number of units, we know that it is 2000 units for Sunshine, 1600 for Roadster, and 400 for Fireball. This is directly given in the question. So what is the overhead cost per unit? It is total overheads divided by number of units. So for Sunshine, it is 4.86 million divided by 2000 units, giving an amount of $2,430 per unit. And for Roadster, it's $4.518 million divided by 1,600 units, giving an amount of $2,823.75. Now coming to Fireball, it is $2.622 million divided by 400 units, giving an amount of $6,555 per unit. So I have just copied the overhead costs per unit of all the three products that we had just calculated. Now let's see what we calculated under absorption costing. So this was what we did under absorption costing, and we arrived at the total cost per unit. So we will do the same thing for activity-based costing also. What is the only difference? The only difference is regarding the overhead cost per unit. So all that we have to do is, instead of the overhead cost that we calculated for absorption costing, we will substitute the figures of ABC that we have just calculated. That is the only difference. So I will just copy this to the left side. So cost under ABC. So all that we have to do is we have to substitute this overhead cost per unit that we had calculated under absorption costing with the figures that we calculated for ABC. And obviously the total cost per unit will also change. So let's substitute and see. Okay, so we have substituted, and the reworked cost comes to $3,330 for Sunshine, and for Roadster, $4,111.25, and for Fireball, $8,455. Please note that all that we have done is we have replaced the overhead cost per unit with the workings that we got from ABC. The direct material cost, the direct labor cost remains the same for both. The only difference is because of the overhead calculation. If you notice, the total cost of Fireball was just $6,700 under absorption costing when the division was based on machine hours. But under ABC, it has increased to $8,455 when it was divided based on cost drivers. Now, what they had asked in the questions to calculate the profit under activity-based costing. Just like we calculated the profit under absorption costing, we will calculate the profit under ABC also. So the only difference is there is a difference in the cost per unit under absorption costing and under ABC because of the difference in the overhead calculation. So I will just copy the total cost per unit that we have just calculated under ABC into the next slide. So here it is, and we had already calculated the profit under absorption costing. So let's take a look at that too. Okay, so this was the profit under absorption costing. Now, what is the modification that we have to do? Instead of the cost per unit that we had calculated under absorption costing, we have to substitute the figures that we have calculated for activity-based costing. That is the only difference. So let's make a copy of the profit sheet. So profit under ABC. So I've just made a copy of the absorption costing, and what I'm going to do is I am going to substitute the total cost per unit with the new figures that we have obtained from ABC. And obviously the profit per unit will change and the total profit also will change. So let's substitute and see. Okay, so the total cost per unit has been substituted and the profit per unit has also changed accordingly. Now, all that we have to do is find the total profit by multiplying the profit per unit with the respective number of units. So it is this row multiplied by this row. Let's see the total profit that comes up. Okay, so the total profit has been reworked. And you will notice that the total profit under ABC is exactly equal to the total profit under absorption costing. because the only change that we have done is we have reworked the overhead and distributed it between the products in a different way under ABC. So the total profit is not going to change. It is only the individual profit of the products which will be different under absorption costing and under activity-based costing. Now, if you see here, Fireball has a loss under activity-based costing when it had a profit under absorption costing. So this requires further analysis. Now, for the analysis part, what do you think is the reason for the loss that has occurred for Fireball under ABC? The reason is simple. It is just because the Fireball has a higher share for the cost drivers under ABC. Now, there were 3 cost pools under ABC. So among these 3 cost pools, which is the cost pool which has resulted in a higher share for Fireball? This is what the examiner is interested in. So we will go and check the overhead distribution that is being done under absorption costing and under ABC, and we will find out which is the cost pool where the difference lies. So let's take a look. So first, let's see how the overheads have been divided under absorption costing. So under absorption costing, this is the calculation that we have done. If you notice here, the total overheads of 12 million have been divided between the products based on the direct labor hours. So what is the ratio? It is 200,000 is to 220,000 is to 80,000. So let's take a look at the Fireball's share of overheads as a percentage. So it is 80,000 out of 500,000. So as a percentage, it comes to 16%, which means that out of the total overheads of 12 million, 16% is going for Fireball. That was under absorption costing. Now coming to activity-based costing. So this is the calculation sheet. We had 3 cost pools. So we will see the cost pools one by one. So first one, the delivery cost to retailers. What is the share of Fireball? It is 70 out of 250. So what is the percentage? 70 by 250 gives 28% share for Fireball. So as far as the delivery cost to retailers is concerned, for ABC, there has been a jump from 16% to 28% when compared to absorption costing. Now going to the second cost pool, that is the setup cost. What is the share of Fireball? It is 25 out of 100. So expressing as a percentage, it is 25%. Here again, there is an increase from 16% to 25%. Now going to the last cost pool, that is a purchase ordering cost. What is the share of Fireball? It is 100 out of 800. So the percentage works out to 12.5%. So here there is a reduction. So when we are explaining the laws of Fireball under ABC, you do not need to consider the purchase ordering cost simply because the percentage has declined for ABC. So the only 2 cost pools that you have to mention for explaining the laws of Fireball under ABC is the delivery cost to retailers and the setup cost, because only in these 2 expenses has the percentage of Fireball increased when compared to absorption costing. So we have understood that the loss of Fireball under ABC is because of an increase in the delivery cost and the setup cost. So what can we do about that? This is where we have to connect it to the number of units of Fireball that have been produced. Let's take a look. So the number of units of Sunshine is 2000 units, Roadster is 1600, and Fireball just 400 units. Now focus your attention on the delivery cost to retailers. We are delivering to the retailers 70 times. That is, this 400 units are being supplied to the retailers by making a delivery 70 times. So for each delivery, how many Fireballs or how many units are being delivered? It is 400 divided by 70, 6 Fireballs on an average. But just take the case of the other products. For Sunshine, we are making 100 deliveries. And how many units are we delivering in total? 2,000 units. So for each delivery, we are delivering 2,000 divided by 100. That is equal to 20 units. So just see the difference. Only 6 units per delivery for Fireball and 20 units for Sunshine. Each time you're delivering the Fireball, you are delivering just 6 units. And as for Sunshine, you are delivering 20 units. So that is the reason for this cost difference. Why can't you just increase the number of Fireballs that you deliver each time? Instead of delivering 6 Fireballs in one go, why can't you deliver 20 Fireballs in one go? It will reduce the delivery charges, right? So this is what is brought to light through ABC, because the number of times that you're delivering the Fireball is very high, because each time you're delivering just 6 units. Now let's take a look at the second cost pool, that is the setup cost. There also the percentage of Fireball was very high. Let's take a look at the number of units of Fireball that are produced for each setup. Even that will be very less. Let's see. Focus your attention on the setup cost. There are 25 setups for the Fireball, and how many units are we producing? 400 units. So for each setup, you are making 400 divided by 25, just 16 units. And as for Sunshine, we are having 35 setups, and how many units are we manufacturing? 2,000 units. So for each setup, we are manufacturing 2,000 divided by 35, or 57 units. See the difference? Only 16 Fireballs are being produced for each setup, while 57 units are being produced for each setup for Sunshine. So you saw the difference, right? It is just like making cookies. Suppose you want to make 20 cookies. You can either make 20 cookies in one go, or you can make 2 cookies each time, which means that 10 times you'll have to switch on the oven and you'll have to call the chef for making the cookies. It is an absurd waste, right? So just like that, Fireball also, the number of times the machinery is being set up is very high. And the number of units of Fireball that have been manufactured in each setup is very low. Just like the example of cookies that I said. So just try to increase the number of units that you produce in one go. Your expenses will drastically reduce. So this information has been brought to light through ABC. So we will note down our final analysis. Fireball's cost increased under ABC because of a higher share of delivery cost 28% and setup cost 25%. Share of overheads was only 16% under absorption costing, since the number of units of Fireball is only 400 units. Assembly and distribution system has to be reviewed. What do you mean by assembly and the distribution system has to be reviewed? Assembly system means you will have to try to increase the number of units that is produced for each setup. And for the distribution system, you will have to increase the number of units per delivery to the retailers. So from activity-based costing, we understood that the assembly and the distribution system has to be reviewed. Now, the last part of the question concerns the board meeting discussions. So each executive expresses his opinion about activity-based costing. So the question asks you to evaluate their opinions, whether in your opinion, the statement made by the executives are right or wrong. This is what we have to do with the last part of the question. So let's listen to the board meeting discussions. So the finance director says, I doubt whether selling Fireball is viable, but I am not convinced that ABC would tell us any more than the use of labor hours in assessing the viability of each product. So what did the finance director just say? She's telling that she's not convinced about ABC. That is, whether it will give additional information. How do you think we should respond to this? Do you think that ABC is useless, that we did not get any information from ABC? We definitely got the information that the setup cost and the delivery cost is high, and we should try to review it to bring down the overheads. So this is something that we found from ABC. So we cannot agree with the finance director. ABC did give us valuable information. So what should our reply be? Cannot agree with the finance director. ABC is useful to get a correct allocation of cost. Firewall's cost increased under ABC because of a higher share of delivery cost 28% and setup cost 25%. And low volumes of firewall sales cause a relatively high amount of setups and delivery cost. This we found out because the number of firewalls that we are selling is very less. So for each unit, the setup cost and the delivery cost is very high. And this is recognized by ABC. If as a review, so we should try to review the system, the fixed overheads can be reduced. It could make firewall viable. So this should be your comment. After the review, we feel that we can increase the number of units per setup. So the number of people who are in charge of setting up the machine can be reduced. The workforce can be reduced. That is a fixed salary that you're paying for the workforce. So we could work out options as to whether there is any possibility for reduction. Let's proceed with the board meeting discussions. So let's see what the marketing director has to say. I am negotiating a new contract with a motorcycle rental company for the Sunshine model. For such a big order, they will not pay our normal prices, but we need to at least cover our incremental cost. I am not convinced that ABC would achieve this, as it merely averages cost for our entire production. So what does the marketing director say? He says that there is a new contract coming up from a motorcycle rental company. So we should give our quote as to the price at which we are willing to sell the Sunshine. So at what price will we quote? So he's telling that ABC will not give any additional information to him. Do you think he is right? Now let me give you an example. You are making cutlets in your house, okay, and you're marketing it. So a small portion of your kitchen is devoted to making the cutlets. Now of late you come up with the idea, why not make spring rolls also along with the cutlets? So when you are going to decide whether to start the spring rolls business or not, what are the things that you will consider? You will definitely consider what is the additional revenue that we are going to get. And we will definitely consider the additional expense that we are going to incur. If the additional revenue is more than the additional expenses, we will start the spring roll business. Now let me ask you something. Will you consider the house rent that you pay? That is a rent that you're already paying. So we don't need to consider a fixed expense for considering whether or not to start a new business in the existing premises. Because this expense we are already paying. Whether or not we start a spring roll business, we have to pay the house rent, right? Just like that, this marketing director is going to enter into a new contract for the Sunshine. So he is worried about the additional income and the additional expenses that he is going to get from Sunshine. And he is not worried about how the existing fixed overheads are allocated between the products. So what should be our evaluation? Agree with the marketing director. ABC is unsuited to the new order because ABC is relating to a past cost, a past fixed overheads. So for a new order, relevant costing has to be adopted. And what do you consider in relevant costing? The incremental costs are to be compared with the incremental revenue. So this is what is to be applied for the marketing director's problem and not ABC. The second point, ABC may not capture cost and revenue interdependencies. Now for the new contract, say for the Sunshine, they want an additional fitting. So it involves additional cost and they are willing to pay additional revenue also. So if you look into the past cost, it will not cover this additional cost that we are going to incur for this new contract. So this is what is meant by the sentence, ABC may not capture cost and revenue interdependencies. So there may be certain costs and revenue exclusively related to that particular order. So that is to be considered separately. There is no use looking into the past cost which is dealt with by ABC. Third point, common costs may not be driven by a single cost driver. This is also one of the disadvantages of ABC. Now I will give you an example. How did we divide the setup cost? It is based on the number of setups. But think for yourself, is the number of setups the only driver that can be used for dividing the setup cost? Suppose the time taken for setting up the fireball and the time taken for setting up the machinery for the roadster is different. Then even the time should be a cost driver, right? Or if the number of laborers that is used for setting up the fireball machinery is different from the roadster machinery, then the number of employees should also be the cost driver, correct? So there might be other common costs also which are driven by multiple cost drivers and not by a single cost driver. And the last point, future cost should be the guiding force and not the past cost. So just like I said, it's a future contract. So you have to be worried about the future cost and the future revenue and not the past costs that are dealt with under ABC. Going forward with the board meeting, let's see what the managing director has to say. I believe that ABC would be an improvement, but it still has problems. Okay, so he is telling that there are certain problems associated with ABC. Example, if we carry out an activity many times, we get better and costs fall. That is true. That is known as the learning curve. What do you mean by learning curve? Now, suppose you are doing a problem of performance management for the first time. You might take 1 hour to do the problem. But if you do it the second time, you might take only 30 minutes. And if you do it for the third time, you might take only 15 minutes. So as and when you repeat the same work, you get better. And the time taken drastically reduces. That is, for repetitive tasks, the time will gradually reduce. This is the meaning of learning curve. But what are we doing in ABC? Under ABC, suppose the purchase ordering cost relating to fireball. What are we doing? The total purchase order cost relating to the fireball divided by the number of units. We are not taking into consideration the learning curve. Maybe the first purchase order will take longer time and the subsequent purchase order will take lesser time. We are not making a distinction like that under ABC. So this is what the managing director is talking about regarding the learning curve. Similarly, some costs are fixed and do not vary either with labor hours or any other cost driver. This is also true. Now take an example of workman compensation insurance. This is the insurance premium that you pay for providing compensation to the employees in case of an accident or a death. Can you relate it to any particular product? Can you say that the accident is because of this product? Accidents can happen with the machinery of any product, right? So you cannot divide the workman compensation insurance between the products by a suitable cost driver because there is no cost driver for it. It is just a fixed cost. So that is the meaning of the sentence. So these are some of the disadvantages of the activity-based costing. So we have to perfectly agree to what the managing director says. So our comment should be, agree with the managing director. ABC ignores the learning curve. That is, people get quicker at performing repetitive tasks. That is the meaning of learning curve, which is completely ignored in ABC. It is true that certain fixed costs are not driven by any cost driver like workman compensation insurance. Now, finally, the chairman is telling something. I cannot see the problem. The overall profit for the company is the same, no matter which method of allocating overheads we use. It seems to make no difference to me. But that is not right. There is a difference between absorption costing and activity-based costing, because initially we saw that the assembly and the distribution system could be reviewed and fireball could be made viable. This information was brought to light only through ABC. And one more thing to be noted is, it is only because of the absence of stocks that the profit under absorption costing and ABC remains the same. In the presence of stocks, a portion of the fixed overheads will be absorbed by the stocks. So it will be carried forward to the next year and that will impact the current year profits. So since the overheads are different between the two methods, the profit will also be different in the presence of stocks. So our comment should be, do not agree with the chairman. profit would have differed in the presence of stocks. However, in this context, I would like to mention that ABC is not recognized for stock valuation if ABC includes the selling and distribution expenses. So in this particular question, the selling expenses, that is the distribution cost to retailers, is also included. So strictly speaking, ABC cannot be used for stock valuation. But if that is removed, that is the selling expenses removed, then we can definitely use ABC for stock valuation. And the second point is, though the total profit remains the same, the actual loss of Fireball is highlighted in ABC. Although we do not know the extent to which overheads would be reduced, ABC indicates a possibility for reviewing the assembly and distribution system. Now, since this is a fixed overheads, we do not know how much we can reduce the fixed overheads, but definitely we can attempt to do it. This is what is indicated in that sentence. If a feasible modification of the assembly and distribution system cannot be done, that is, if we fail to review the system to our advantage, then options of discontinuing Fireball may improve the profitability by $182,000. Why is it improving by $182,000? Because if you discontinue Fireball, we assume that the loss that Fireball incurred under ABC can be removed. So in the board meeting discussions, whatever has been discussed are the advantages and disadvantages of ABC. So any type of analysis can be handled if you know the advantages and disadvantages of ABC. So we are finally done with the question. If you have found this video useful, do click the subscribe and the like button, and do watch out for the upcoming videos each week. So thank you all and have a great day.